Welcome back to Investing Talk Podcast. Today, we're doing something a little different. We're cutting through the market noise to zero in on one single highly anticipated event that's Target's upcoming earnings report. It could really send ripples through the whole retail sector. So for any of you looking to stay ahead of the curve, or maybe just curious about what truly moves the needle in a consumer-driven economy, well, this conversation is definitely for you. We're going to unpack the street's expectations, dig into Target's recent performance trends, see what's been happening, and we'll highlight the key metrics that absolutely demand your attention when those numbers finally drop. Before we jump in, though, if you find value in these discussions, please remember to subscribe, hit that like button, maybe leave a comment below. Your engagement truly helps us bring you more of this content. And if you want to support us further, well, you could consider buying us a coffee. The link's usually below. Also, if there's a specific company you'd like us to look into for a future discussion, be sure to leave its name in the comments. We do read those. Okay, let's dive right into it. Target is officially on the clock, set to report its fiscal second quarter results for the period ending July 2025, a big moment.
Indeed it is. And what's notable here is how consistent the chatter is around the reporting date. You've got various reputable sources, Zacks, MarketBeat, others. They're all pointing towards Wednesday, August 20, 2025. That seems pretty locked in.
August 20th, okay.
And, true to Target's usual form, we expect these numbers will probably hit the wire before the market even opens.
Right, the pre-market release.
Exactly. Typical for many large retailers. Gives everyone time to digest before the opening bell.
So if that's the date, August 20th, what's Wall Street bracing for? What are the analysts thinking for this upcoming report?
Well, the consensus for earnings per share, EPS, it's clustering in a fairly tight range. We're seeing between, say, $2 and $2 and $2.08 per share.
Yeah.
Public.com's projection is sitting at that lower end, $2.02, while Zacks is nudging a bit higher at $2.08.
Not a huge spread then.
No, it indicates analysts have a pretty firm idea, but, even small deviations, they can trigger significant market reactions, especially with a name like Target.
That gives us a clear profit target, no pun intended.
Got it.
Now, how does that stack up against what Target just delivered, in their last report? And maybe more importantly, what forward-looking guidance did they give us back then?
Yeah, good question. To put that $2.02 to $2.08 in perspective, in their previous report, Q1 fiscal 2025, Target actually reported two different EPS figures. It's crucial to understand both. Their GAAP EPS, that's generally accepted accounting principles, the standard number that came in at $2.27, looked pretty good on the surface. However, their adjusted EPS was significantly lower at $1.30.
Ah, the adjusted number.
Exactly. And that's what analysts often focus on, right?
Yeah.
Because it strips out, one-time noise, like large non-recurring gains or losses.
Yeah.
It shows what the company really earned from its core operations.
Got it. So $1.30 adjusted last quarter versus an expected $2.02 to $2.08 this quarter.
Right. And looking ahead from that Q1 report, management had guided their full fiscal year 2025 GAAP EPS to a pretty broad range, $8 to $10. But they also indicated they were expecting a low single-digit decline in sales for the full year.
Ooh, okay. Declining sales expectation.
Yeah, so the big question hanging over this upcoming report is whether that cautious outlook holds. Will they revise it up? Or maybe even down?
So we know what's expected now and what they said last time, but, context is everything. To really understand where Target might be headed, we probably need to glance in the rearview mirror. How have they actually performed against these kinds of expectations historically? Especially recently, have they been hitting the mark or?
This is where it gets really interesting and frankly a bit nuanced. Because in Q1 fiscal 2025, the last report, Target actually delivered a notable miss on that adjusted EPS consensus.
The $1.30 number.
Right, that $1.30 came in significantly below the $1.62 to $1.65 consensus estimate at the time.
Wow.
Yeah, it was a negative surprise of roughly 20%. That's not a small miss for a company like Target.
No, a 20% miss definitely raises eyebrows. Was that becoming a pattern or was it more of an anomaly? You wonder if it was a one-off or maybe a sign of deeper issues?
Well, fortunately, if we look at the immediate past before that Q1 miss, it does appear to be more of an anomaly. If you rewind to the 3 quarters just prior Q4 fiscal 24, Q3 24, and Q2 24, Target actually beat EPS consensus in all of them.
Ah, okay, so they had a streak going.
Exactly. And what's more, they also modestly beat revenue expectations in most of those periods too. So yeah, the Q1 miss was significant, but it broke a recent streak of actually exceeding expectations.
That's somewhat reassuring for investors, I suppose. Speaking of revenue, what were the key sales metrics telling us, particularly in that recent Q1 report where they missed on EPS?
Well, in Q1 fiscal 2025, net sales clocked in at $23.8 billion.
Okay.
Now, that was a slight dip from $24.5 billion in the prior year, so it does signal some ongoing top-line pressure, meaning overall sales volume is shrinking a bit.
Right, consistent with that full-year decline forecast.
Exactly. However, it wasn't all gloom. There were some genuine bright spots, particularly in digital. Digital comparable sales actually grew 4.7% in Q1.
Okay, that's decent growth.
It is, and this growth was notably driven by over 35% growth in same-day delivery services.
Wow, 35%.
Yeah, specifically their Target Circle 360 program and that continued expansion of their popular drive-up service. People really like that convenience. Management also highlighted strong performance in seasonal moments like Valentine's and Easter and those successful designer collaborations like the one with Kate Spade.
Right, those always get buzz.
They do. So while overall sales faced headwinds, that shift towards digital convenience is clearly, well, it seems to be working for them.
That definitely sounds like a mixed bag then. Some overall sales pressure, but really compelling growth in digital and same day. That's a huge differentiator in retail today, isn't it?
Absolutely crucial.
Was there anything else significant or maybe unusual about that Q1 report that we should be aware of? Anything hiding in the details?
Absolutely, yes. It's really important to look beyond just the headline numbers sometimes. That Q1 fiscal 2025 GAAP EPS of $2.27, which, like we said, initially looks quite strong.
Yeah.
It actually benefited from a significant $593 million pre-tax gain.
Ah, where did that come from?
It was related to credit card interchange fee litigation. Basically, a legal settlement, a one-time windfall.
Gotcha. Not core operations.
Exactly. Not something generated from their day-to-day retail operations.
Yeah.
And that's precisely why that adjusted EPS of $1.30 is so critical. It explicitly excluded this one-time item. For us, analyzing the business, that adjusted EPS is the real headline. It shows what Target truly earned from its core business, separate from legal stuff.
Yeah, that really underscores why you have to dig beyond the first number you see.
Great point. And for people wondering about the immediate stock reaction, after these reports come out, do we have clear data on how Target's stock typically responds? Does it jump? Does it tank?
Well, our specific sources here don't provide definitive next day price reaction percentages for these specific past reports.
Okay.
But we can talk about general market behavior, right? For a company like Target, a strong beat on sales, especially coupled with raised guidance, that can spark a significant rally.
Conversely, a miss, especially on guidance, if it points to continued softness in consumer discretionary spending, that often leads to immediate selling pressure, sometimes significant pressure.
Makes sense.
So while we can't give precise numbers here, you as the listener can certainly cross-check. Go look at price charts around those past earnings dates we mentioned, like August 16, 2023, November 15, 2023, March 5, 2024, and the last one, May 21, 22, 2025. See how the stock moved for yourself.
Right. Do your own homework on the chart.
Exactly. Knowing those historical patterns can help anticipate potential reactions this time around.
Okay, so beyond the raw numbers, what about strategy? What strategic moves has Target been making during the past quarter, and how do those fit into the broader retail landscape? They're not just sitting still, presumably.
No, definitely not sitting still. Target's been quite proactive, actually. To connect this to the bigger picture, one significant strategic move they announced was the formation of an acceleration office. Sounds a bit corporate speak, maybe.
Yeah, acceleration office.
But it's led by Michael Fidelk, who has a strong background in finance and operations within Target. And this isn't just reshuffling chairs, right? It signals a recognition that in today's fiercely competitive retail environment, speed and agility, they're now just as crucial as, say, inventory management.
Move faster.
Exactly. The stated goal is to speed up decisions and execution on core initiatives, specifically to return to growth. It tells us they're feeling the pressure, likely internal pressure, to adapt quickly. Maybe differentiate themselves from slower-moving competitors by leveraging things like those successful limited-time partnerships and the momentum they've built in same-day delivery.
So they're clearly trying to shake things up internally to get back on a growth track. What about the external environment they're operating in? The consumer? Are people feeling flush, or are they tightening their belts? What's the read there?
That really is the multi-billion-dollar question, isn't it? Management's existing full fiscal year 2025 outlook, the one calling for that low single-digit decline in sales that clearly reflects a cautious view of discretionary spending.
Right. The non-essentials.
Exactly. Non-essential purchases like home decor, apparel, electronics, often the first things people cut back on when there's economic uncertainty, or even just perceived uncertainty. We're seeing shifts in category mix across retail, where consumers prioritize essentials, like groceries, over those discretionary items.
Show headwinds from cautious consumers.
Yes, but on the flip side, that growth in digitally originated sales channels and same-day fulfillment, that continues to be a notable sector-wide theme. And Target is actively embracing this trend, leaning heavily into convenience, meeting customers where they are, whether it's drive-up or delivery. Their Q1 commentary really highlighted that.
But, okay, so internal strategy changes, external consumer pressures. How are the analysts reacting to all this complexity? Are they generally optimistic, skeptical, somewhere in between?
It's a bit of a mixed bag still, probably leaning towards cautious optimism, maybe. MarketBeat noted that around the time of the last report, May 21st, Target actually updated its full fiscal year 2025 EPS guidance. They tightened it to a range of $7 to $9.
Okay, tightened from the $8 to $10 range initially.
Well, the initial was $8 to $10 gap. This $7 to $9 update might have been adjusted or a refinement, but the key point MarketBeat made was that the $7 to $9 range sat below the analyst consensus at that specific time, which was around $8.59.
So management was more cautious than the street then.
Precisely.
Wow.
It implied a more cautious stance from Target leadership compared to what analysts were expecting back in May. Zacks, for its part, acknowledging that Q1 negative surprise is projecting $2.08 EPS for this upcoming quarter. So that indicates an expectation for sequential improvement from Q1's $1.30 adjusted, but still down year over year from Q2 last year.
Right. So analysts are factoring in the recent miss, but looking for, well, signs of stabilization or maybe some recovery.
Exactly. They want to see if the bleeding has stopped, basically.
With all this information swirling around, then the history, the expectations, the strategies, the pressures, let's game this out a bit. What would a truly positive surprise look like for Target's upcoming earnings? What would a bullish scenario entail? What numbers would we need to see?
Okay, a true beat and raise scenario, that's the gold standard, right? Right. That often really ignites a stock. It would likely require upside on key metrics, like customer traffic. Are more people coming into the stores or using the app? And comparable sales, that's the sales growth at stores open for at least a year, need to see that stabilize or turn positive.
Especially in those discretionary categories.
Yes, exactly. We'd want to see stabilization or ideally even some growth returning to those critical discretionary spending categories you talked about, apparel, home goods, etc. On the profitability side, you'd want to see improved gross margin. Are they making more profit per item sold? Or better selling, general, and administrative expense leverage, basically? Are they managing their operating costs sufficiently as sales change?
And ideally without one-off gains helping them out.
Absolutely. Ideally, this would happen without relying on things like that big litigation gain we saw in Q1. These to be core operational improvement. And crucially, perhaps most importantly, it would involve management raising their full fiscal year 2025 EPS guidance, maybe back towards that initial $8 to $10 range or even above it.
Raising guidance would be key.
Definitely. And stronger digital comparable growth, maybe accelerating beyond Q1's 4.7%, plus continued really strong growth in same-day delivery. Those would also be very positive indicators. Signs the strategy is working.
Okay, that paints the picture for the bull case. Now, on the flip side, what would lead to a more negative outcome? What should listeners be watching for that could signal trouble?
Well, a miss could feature weaker comparable sales, obviously, especially if traffic numbers slow down even further than they have been. We might also see margin compression. That means profit margins shrink, maybe because they had to run aggressive promotions to move inventory. Or maybe issues like inventory shrink theft or damage are getting worse.
Margin pressure is always a worry.
Always. And perhaps even more concerning would be soft guidance. If they come out and tighten or even lower that full fiscal year 2025 EPS range, maybe staying below $8 or reinforcing that cautious low single-digit sales decline outlook, that would be bad news.
Yeah, confirming the weakness.
Right. And another sizable negative surprise against the consensus EPS estimate, like that 20% miss we saw in Q1, if that happens again, that would likely put significant pressure on the stock, especially if it's coupled with commentary about discretionary categories remaining weak and traffic slowing down.
So it feels like guidance is really, really central here.
It absolutely is.
What does this all mean then for someone trying to cut through the noise? If you had to pick one single most important thing to watch when Target reports, what would it be?
That's a great question. Gets right to the core. I think the single most important focus has to be that forward guidance.
The outlook.
Yes.
Yeah.
Pay very close attention to any changes they announce for their full fiscal year 2025 sales outlook. Is it still a low single-digit decline or something else?
Yeah.
And any updates to that gap or adjusted EPS range? Is management getting more optimistic, or are they digging in for a tougher period?
Okay, guidance first. What else?
Beyond that, closely watching the comparable sales trends. Is the trajectory improving, flattening, or worsening? And also the sustainability of their digital and same-day delivery growth. Are those engines still firing strongly? Because those operational metrics tell you if the strategic initiatives, like that acceleration office, are actually gaining traction and translating into results.
Got it. Guidance, comps, digital momentum. So putting it all together, expectations, past performance, strategic moves, the environment.
Right.
Where do we lean right now? Based on the sources, what's the overall vibe for Target heading into this report?
You know, our overall leaning right now is pretty neutral, actually.
Neutral, yeah.
If you were to ask for like a confidence score, maybe a 5 out of 10, right down the middle.
And the rationale for that neutrality?
Well, the rationale is that while the street's expectations for this quarter, that $2.02 to $2.08 EPS, seems somewhat modest, especially after last quarter's big negative surprise, management's own full-year outlook remains quite cautious. They're still forecasting that slight sales decline for the year. So there's this real tug of war. Expectations aren't super high for Q2 itself, but the full-year picture is still murky. Directional clarity, where the stock goes next, really hinges on that updated guidance and where their comparable sales trajectory actually goes in Q2 and beyond.
Needs more evidence, basically.
Exactly. We need to see concrete signs that their internal strategies are starting to counteract those consumer headwinds and translate into tangible sales improvements.
Okay. Now, for those listening who might be considering trading around this event, obviously we're not giving financial advice here, but what are some high-level practical considerations?
Right. Standard disclaimer applies, but thinking practically. For the risk-averse investor, it might be wise to consider maybe avoiding holding common shares directly through the earnings print itself.
Because of the potential volatility.
Exactly. Given the uncertainty around comps and especially guidance, there's potential for a significant gap up or down. So one approach is just to wait. Wait for the new guidance to be released, digest the conference call, and then recalibrate your exposure once there's more clarity.
Wait and see. What about more risk-tolerant folks?
Well, for those who are more risk-tolerant, maybe option strategies could be considered, strategies that might benefit from a significant directional move, either up or down. But, and this is big, but only after you've had a chance to check the actual implied volatility going into the report.
Ah, the IV. How much movement the market is pricing in.
Precisely. You need to know if the options are expensive or cheap relative to the expected move, and also look at the skew, which tells you if the market is pricing in more fear of a downside move versus expectation of an upside move.
Right. Critical checks before placing any options trade.
Absolutely essential. Our sources here didn't provide specific options data or put-call ratios, so that independent check is vital before structuring any trades. Don't just guess.
That's a great practical note for our listeners. Very important. And as we wrap up this look at Target's upcoming earnings, here's maybe a final thought for you, the listener, to consider. How might Target's strategic emphasis on things like its acceleration office and those digital initiatives like same-day delivery, how might that not just impact its immediate earnings this quarter, but maybe signal a broader, longer-term shift, a shift in how traditional brick-and-mortar retailers are fighting for market share and adapting to, well, constantly changing consumer behavior in the long run? It feels bigger than just one quarter, doesn't it?
Oh, absolutely. It's a microcosm of the whole retail transformation. This proactive stance, trying to blend the physical footprint with digital convenience, suggests they understand where the battleground is moving. How successful they are in executing this. Yeah, it could really set a benchmark or at least provide lessons for the entire sector. It's a fascinating high-stakes experiment in adapting a legacy business model for the future.
It really is. Well, thank you for joining us on Investing Talk podcast. We certainly hope this breakdown of Target's upcoming earnings report helps you stay well-informed and gives you some things to watch for. Don't forget to subscribe, like, comment, tell us what you think. And if you feel like it, you can buy us a coffee. And please, if there's a company you'd like us to discuss next, leave its name in the comments below. We'll definitely take a look. Until next time, happy investing.